If you've been on the fence about investing in real estate, 2025 offers a unique opportunity to enter the market at a pivotal time. With the market showing clear signs of recovery and stabilization, early movers stand to benefit from a perfect combination of economic factors, supply-demand dynamics, and innovative trends reshaping the industry. My name is Stephen Gage, President of Vision Commercial Development, and today we're going to talk about why now in 2025 is the perfect time for you to invest in real estate. As we step into 2025, the real estate market is demonstrating clear signs of recovery and stabilization, creating a unique window of opportunity for investors ready to make their move. By the end of 2025, approximately $3.1 trillion worth of global real estate assets will face maturing debt. This amount of maturing debt creates a refinancing shortfall estimated to be between $270 and $570 billion. While this may sound like a challenge, it's a significant catalyst for transaction activity. Investors with access to capital and a strategic mindset can find themselves in a prime position to acquire undervalued assets or negotiate favorable terms as distressed properties and refinancing deals flood the markets. For commercial real estate, this liquidity shift represents a major opportunity to secure assets at attractive pricing, as sellers look to offload properties to meet debt obligations. This type of market environment historically leads to a surge in activity as investors position themselves to capitalize on the recovery cycle. The broader economic landscape also supports the real estate market's resurgence. Moderate economic growth is projected in 2025, with central banks globally starting to loosen monetary policies cautiously. This shift indicates a move towards a more supportive financial environment, easing the strain on borrowing costs and fostering greater market confidence. In the U.S., the economy is expected to outperform many other advanced nations, providing a solid foundation for real estate investments. The relative strength of the American economy offers both stability and growth potential, making U.S. real estate one of the most attractive options for investors seeking high returns and manageable risks. One of the standout elements of this recovery is the performance of rental markets. Unlike previous cycles where property value growth was often driven by speculative yield compression, 2025's recovery is fueled by solid rental performance. This dynamic is particularly evident in sectors such as multifamily housing and industrial properties, where demand continues to outpace supply. Strong rental performance ensures steady cash flow for investors while contributing to the appreciation of asset values over time. For those focusing on income-generating properties, this creates a dual benefit: reliable income streams and potential capital gains as property values increase. As you should know, timing is critical in real estate, and the early stages of a recovery cycle are often the most lucrative for investors. As the market begins to stabilize, early movers can acquire properties at favorable prices before competition intensifies and valuations rise further. Historically, investors who act during these transitional periods, they benefit from both higher returns and greater portfolio stability. Additionally, early participation in a recovering market allows investors to position themselves strategically, taking advantage of shifting trends and emerging opportunities. For example, those who secure in-demand properties now can benefit from rental increases, appreciation, and improved market liquidity as the recovery progresses. The real estate market in 2025 presents a compelling landscape driven by evolving supply and demand dynamics. These shifts, shaped by economic factors, demographic trends, and sector-specific needs, create unique opportunities for savvy investors to capitalize on imbalances and emerging trends. One of the most interesting trends is the worsening supply shortages across multiple property types. In regions like the U.S. and in Europe, the availability of prime real estate assets is failing to keep pace with demand. This scarcity is particularly evident in high-growth urban areas and specific property sectors. For investors, this creates a clear opportunity. Assets in short supply typically see faster appreciation and strong competition among buyers and renters, driving up prices and driving up rental income. In residential real estate, a lack of new housing developments is pushing demand higher, particularly in markets experiencing rapid population growth or job creation. For commercial properties, the shortage is most crucial in high-performing categories like industrial warehouse, logistical facilities, and data centers. The landscape of real estate investing in 2025 is becoming more diverse, offering opportunities across various points in the capital stack. Investors can choose from traditional property acquisitions to alternative and niche investments that address emerging needs. For example, Equity investments, which involve directly purchasing or developing properties, remain an important aspect of long-term growth and cash flow. Multifamily properties, industrial spaces, and data centers are also appealing due to the high demand and consistent returns. Credit strategies such as mezzanine financing and bridge loans have gained traction as well, especially as $3.1 trillion in real estate assets globally face maturing debt by the end of 2025. These strategies allow investors to step in and address refinancing gaps, generating higher yields while supporting distressed or transitioning assets. There's also a continued rise of alternative and niche property types going into 2025. Data centers have emerged as a critical asset, driven by the explosion of AI, cloud computing, and e-commerce, offering stable leases and high-value returns. Similarly, senior housing has seen growing demand as the population ages, providing opportunities in independent living, assisted living, and memory care communities. Energy infrastructure, such as solar farms and wind turbines, is also gaining traction. With sustainability becoming a priority for governments and corporations, these properties provide long-term leases and consistent income. Geographic diversification is another key strategy for investors in 2025. In the U.S., cities like Dallas, Austin, and Charlotte are experiencing rapid population growth, job creation, and robust housing demand, making them prime locations for residential and commercial real estate investments. In Europe, regions like the Nordics and Benelux offer compelling opportunities, with rental growth and limited supply creating favorable conditions for stability and returns. Emerging markets, including secondary U.S. cities like Indianapolis and parts of the Southeast, also present attractive opportunities with lower entry costs and high growth potential. Understanding and leveraging the position of the real estate market within its cycle is crucial for investors looking to maximize their returns in 2025. As the market transitions from the end of its last cycle into a period of recovery and growth, this unique phase offers opportunities that are particularly advantageous for early movers. The real estate market operates in cycles characterized by phases of expansion, peak contraction, and recovery. In 2025, the market is positioned in the recovery phase, where values stabilize, transaction volume increases, and investor confidence begins to rebound. Historically, this stage has proven to be a prime time to deploy capital. Early movers can acquire undervalued or distressed assets before prices rise substantially, positioning themselves to benefit from appreciation as the cycle progresses into the expansion phase. Investing in real estate in 2025 isn't just about buying property. It's about strategically positioning yourself to take advantage of a recovering market. Whether you're eyeing multifamily units, industrial spaces, or alternative sectors like data centers, the potential for returns is significant for those who act now. This year represents a unique moment in the market cycle, where early movers can secure better deals, build diversified portfolios, and ride the wave of the next growth phase. Don't wait for the competition to heat up. 2025 is your best time to invest. If you found this video helpful, don't forget to like, subscribe, and share your thoughts in the comments. And if you're interested in commercial real estate investing and you don't want to do it alone, our company, Vision Commercial Development, is always on the lookout for new investors who'd like to participate in groundbreaking projects. If you'd like to start working with the team today, please head over to visioncommercialdevelopment.com and let's chat about new and fun investment opportunities that we could potentially work on together. Thank you all for watching, and we'll see you in the next video.